Hello, everyone. Welcome to the first video podcast of Everything Tax, a podcast series by Anderson UAE. I'm Devena, your host for today. Today, we're going to discuss about the tax regime in the UAE and in basic business terms. That is, if a business operates in the UAE and wishes to operate in the UAE, what all do they have to look at? To give their insights on the topic, I have tax experts with me in the room today. I firstly have Gaurav Chugani. He works in the capacity of a tax manager, Indirect Tax, and has more than 7 years of experience in supporting businesses in the UAE for VAT and excise tax since their implementation. His experience is detailed in industries like oil and gas, IT, tobacco, e-commerce, real estate, hospitality, and logistics, and I think counting. We also have Rishi Sundaram with us here, who works as a senior associate and provides advisory for indirect tax as well. He has dealt with clients from different industries with presence across UAE, Oman, Bahrain, and KSA. Thank you, Gaurav and Rishi, for joining us today and for giving us time to understand more about the tax landscape in the UAE. Let's dive right in. So I'll start with you, Gaurav. So you've been in UAE and you have been in this business since the tax was implemented. Can you give us an idea, or can you summarize for us the tax landscape of the region, and what should a business keep in mind if they operate in the UAE or wish to operate in the UAE?
First of all, thank you, Devina, for such a good introduction.
Thank you.
And so I was fortunate enough to be a part of the implementation of excise and VAT in the regime. So this region has changed a lot. So when I came here, over here there was no tax. There was no question of tax over here. So I could see that since 2017 there was a lot of hype about implementation. Everyone was running behind the implementation. There was a rat race basically. So the law was out, then the regulations came in. Regulations came in between something like October, November. We had 2.5 months to implement that. And it was a very small time frame which we got for the VAT implementation. But yes, it was implemented in a very good fashion. The FTA was involved. They were guiding us, helping us in the registration, helping us in explaining the provisions of the law. There were many roadshows which happened. And over the period of 5 years, I can see there's many things which have evolved. There has been rationalizations. There has been legal provisions which have been sort of amended, changed. So everything has become so different now. If I see from like pre-implementation and post-implementation, there has been a drastic change. Okay. The businesses have changed. What you might say, businesses have adapted those changes. The supply chain has changed. Everything has gone through a drastic change, if you ask me.
So you mean to say that as the tax was implemented since then and now, in these 5 to 5.5 years, everyone has evolved. So have the businesses, so has the tax authority. Have they tried to sort of come into common ground so that everybody sort of understands the complete process and procedure?
Agreed. I totally agree with that. And the FTA has been very cordial. They have supported every business. If you want sort of clarifications, if you want support, if you want guidance, the FTA is available. And so what happens is that we work hand in hand with the FTA also. So if you have queries, if you have any sort of a technical glitch also in the portal or something, we can just roll back to the FTA, seek guidance, and that is how it works. So it's not just tax agents and consultants supporting businesses. It's also the FTA, which is supporting us.
Great. That's great to hear.
Yes.
So we have seen companies engaging a lot in audits. Companies have actually gone into the procedure of making sure that everything that they do is compliant with the tax authorities and the regulations. Mm-hmm. So what do you think that the companies need to keep in mind, and what should they entail when they do something of that sort?
So basically, since it's been 5.5 years, there has been a lot of changes, and the FTA is wanting to review files, and audits have been done for many of the industries. So basically what I remember is the real estate industry was one of the first industries to be audited, followed by insurance, banks, and then automobile industry. So these are the major industries which have been audited. Of course, IT industry also has been audited, and we have seen many of the conglomerates, the big family groups have been audited, and the audit has been so fair, so to the point, wherein the FTA comes with a checklist. They come with a sort of a handbook wherein they know what they have to check. It's a defined process, and I appreciate that they are unbiased. So if they have to review a perspective for a particular client, they will keep that same perspective for the different client also. So that's something very good about this region.
Okay, and how do you expect the companies to prepare themselves for something like that? So for instance, there are many companies who actually have an in-house tax agent. There are companies who have tax consultancies, and there are companies who are not so large enough to afford any one of them. So how do you think each type of such companies can keep themselves compliant or ready for such audits?
I totally appreciate the fact that there are companies who are having in-house tax teams. There are companies who have tax agents. There are companies who have tax consultants. But what happens is that it's the onus of the company to maintain all documents, to keep all records ready. So ultimately, what I would say is compliance is the key. So if there is non-compliance on the part of the company has to bear the what you might say administrative penalties or the consequences, whatever it is. But ultimately, it's the responsibility of the company. And if tax agents are there, what happens is that there's a right direction, a right guidance which is provided, which helps them sort of be in the correct side of the law. Being in the correct side of the law is the key. That is what I would say, because law of the land is, again, which is something to be kept in mind and
of course,
to be appreciated.
Yeah, and especially when, as you said, that they are being so cooperative. They're rationalizing the complete process, keeping businesses and their everything, all the nuances in mind.
Correct.
So I think it's a responsibility of every business to also comply.
Agreed. But the landscape has changed so much. I would just like to add over here, the landscape has changed so much that there has been several amendments in the VAT law. Be it the executive regulations, it has gone through 2 or 3 times of amendments. The VAT law itself got amended recently. So changes are there. So what is happening? The changes are basically because the business model is changing. The type of business is changing. There are futuristic business coming in place.
Exactly, and all the IT related, the kind of like tech companies coming in as well. So they
Precisely. So the amendments are rovering around these sort of changes in the business and supply chain. And of course, we have seen that the FTA brings amendments and changes, and these changes are explained very clearly. Like if example I'll give you, they conduct roadshows. The roadshows are so good that they give us such a lot of guidance, and the intent of the change is very clear. Like in other tax jurisdictions, we do not get the intent why this change came into place, but over here now we know precisely why change is coming.
That's the advantage. I think that's the very important and key point of the UAE government. Whether be it tax or whether be it anything else, they're always very clear as to why they are implementing it as well.
Precisely.
So then what happens is very easy for people to comply by the law because they know it's for them. Because their intentions are always for the people, for the businesses to grow the economy and grow each and every person
Agreed.
who's actually investing here.
Agreed. So what happens is that since there has been so many changes and so many amendments which are come in place, so what we have done is that we have sort of collated all these amendments, changes, and we have made a book which is going to be launched.
Wow.
It's actually launched, and the printing is still, we are still printing more copies because it's so much in demand. So we will be sharing these copies with most of our clients, and whoever is interested will be sharing this copy also.
Great.
So
What is the book titled already, or is it still in process?
It's titled and it's sort of ready, and we will be it's made by our partner, Mr. Anurag Chaturvedi, and it will be available shortly for everyone's viewing.
Awesome.
Yes.
That's great. That sounds good. Okay, moving back to something that you just mentioned. You spoke about the changes that the tax landscape has seen. Could you give me the major ones? What are the major changes that I've come across?
Imara tax. The implementation of Imara tax.
Okay.
Rishi, if you would like to add something about Imara tax changes.
Yes, absolutely. So Imara tax, the purpose of bringing in Imara tax is it's a one-stop platform that is converging multiple taxes, whether you think about VAT, ESR, excise tax, and other forms soon to be corporate tax, of course, into one interface. And this becomes important for companies because what we're seeing is that the FTA is moving towards a system which includes linkages with governmental data, such as Emirates ID. So you're seeing this shift towards a technology-based, almost artificial intelligence-based system. And companies should definitely keep this in mind and analyze the implications, because what we may see is through these technical and technology changes, the process and the shape of audits may be very well different in the near future. And keeping up with those changes would require companies to adapt in the form of ERP systems, IT systems, and yeah.
So now that you're saying that companies need to sort of adhere to these, of course, if they're bringing technology into the scene, which means that only the initial setup of company is going to be slightly difficult possibly, but once they all are set up on that platform, it's going to be very seamless. And that's the aim of actually having such a platform that actually streamlines everything in one place. So what do you think is the need of the hour for the companies, both of you, whoever wants to sort of put in more information on this or more light on this? What do you think is the need of the hour for any company who operates in the UAE?
So basically what I feel is the need of the hour currently would be preparing yourself for audit. Because now what is happening is that we're seeing audits are very frequent, and the FTA is more keen about particular industries, and so preparing yourself for audit is the key right now. If you have made certain errors, of course people do make errors, because it's during implementation there has been tax positions which would have been adopted, may have undergone a change, so there could be certain things which you need to rectify. If rectification could be done, conduct a pre-audit, conduct a health check, understand the mistakes, quantify the mistakes, and try to rectify them by filing voluntary disclosures. And it is very important, if you file voluntary disclosures, the penal consequences are very, very nominal as compared to the audit penalties, which could be 50% flat plus 4% per month, which could start from the tax period when you were due to pay. So I would suggest, if there is a need that if you want to get yourself reviewed, you should get yourself reviewed, because if you think compliance is costly, try non-compliance.
Wow, that's a good line.
So basically what happens is that people think that, okay, fine, we'll rectify it once the FTA comes. It doesn't work like that.
You have to do it way prior.
Yes, you have to plan your actions.
Yeah.
Rishi.
Yep, absolutely. And just on the topic of tax audits, I think the need of the hour is, again, going back to the point of optimizing your ERP system. Now, we've seen in audits, they deep dive into your compliances, your tax data, and the requirement to provide all the information to the FTA is in specific formats and specific criteria. So it's important for the companies to optimize and kind of align their systems in ensuring that your systems are generating and providing all the information that is required during the audit. And we've seen many a times that mostly the companies that bear the most risk in terms of audits are the ones that kind of have this mentality of just having the bare minimum compliance, right? And there's even more reason right now to invest in your due diligences with regards to your IT systems, because we've seen slowly in other GCC regions there is potential for the requirements of your transaction-wise details to be submitted along with the VAT return, regardless of your net position, whether it's a payable or refundable. So companies should gear up for such requirements, and they should start now.
Great. Okay, that's interesting. So, okay, now that we're on the topic of audit, I'll continue with you, Rishi.
Yep.
So, what are the major areas of audit? Like, how does the FTA decide on the parameters of each? Is it more industry specific? Is it more like process specific? Is it based on process of a business? Like, for example, manufacturings have something else, services have a list of procedures to follow, and then so do trading companies. Or is it completely industry specific?
Right. There are various methods that the FTA may go about it. Some are industry specific, some are risk based. But in general, I'd say the major areas that the FTA audit is, of course, transactions that are a loss of revenue to them. So in nature of transactions wherein tax is not charged, so you think about things like zero-rated supplies, your exempt supplies, out-of-scope supplies, such as export of goods, where the documentation is maintained, the conditions are there, exit certificate, which is becoming very much a relevant point in the industry now. Export of services with conditions being met for exempt supplies, and other areas when it comes to input tax credits. So whether companies have the availability to deduct those input tax credits. You think of things like blocked input taxes in the form of entertainment expenses, expenses relating to vehicles not available for personal use, and of course any input tax credit that you're availing that is in relation to your non-business use. So definitely these are pointers that companies need to be aware of, and that's the primary thing that the FDA will go and audit first.
So you're saying that, are you saying that maybe free zone companies sort of have to be more careful?
Absolutely.
And designated zones as well?
Yes.
If I'm right?
Yes.
I'm not the expert though, but I've heard these keywords here and there. Would you like to add, Gaurav?
Yeah. So what happens is that typically what we have seen is the FDA goes industry-wise.
Okay.
So
that's interesting.
So maybe they go and review certain insurance clients, then they review tobacco clients for excise, then they review this automotive guys, and then that's how they sort of plan the audit. And the beauty of the audit is that for everyone they take the same tax position. There's nothing different.
Okay.
The process is same.
Mm-hmm.
So we have seen the process to be same for everyone, because we've supported clients in audit and successfully we have concluded many audits. So what happens is that to justify things and to get the audit concluded is also a task, because you need to provide substance to the FDA. You need to provide records, you need to provide evidences, and we need to be in such a fashion, we need to provide data in such a fashion that there is no element of risk. If there is an element of risk in the audit, then the FDA may sort of deep dive.
Okay.
So you need to be very clean, very sort of compliant. And then, of course, there's nothing for you to be afraid of audits. Audit is just a part of the entire tax regime. So it's good to be audited, I would say, because you get a sort of, if there is something which you're missing out on, you get to know that and you rectify and you move on in life. So it's good to be audited in my perspective.
Okay. There's one thing that immediately struck me as a question when you were talking right now, is that how deep can the FDA deep dive? So you're saying that if I have a company in a certain industry which sort of is prone to getting audited, how back should my my records be? Like how many years of record can the FDA possibly ask for?
So it's a very good question, I would say. 5 years is the time frame which is defined, which everyone simply says.
Yep.
5 years from the tax period the audit has been started, so they can go back 5 years.
Okay.
That is the general principle. But additionally, there was an amendment which came in place, which says that the FDA, once they have started the audit, so they can go back 5 years, but they can conclude this audit within a span of 4 years. So effectively, you have to maintain records for 9 years.
9 years.
And for certain cases when the FDA thinks there is a tax evasion, they can go back. If for real estate, you have to maintain records for 15 years.
Oh my God, really?
Yes.
So is it industry specific again, the years, or
Yes.
it's good for any company to maintain?
General criteria is 5 years, plus 4 years, which has additionally been now.
Okay.
So yesterday also I got a call from one of my clients saying that how many years of records we need to maintain, because they are incurring cost to maintain that physically,
course, yeah.
because they have to hire a storage company and they have to maintain that. So we said that you have to maintain at least for 9 years. So they have planned their storage and they have planned their entire what you might say finances. Now they are going digital instead of
course,
maintaining physical records.
Yeah, for sure. Storage, iCloud is much better than, or OneDrive, or any cloud solution is way better than physical storage.
Correct.
Okay, great. So, so as a company, what audit hurdles can be faced by them? Like, would you like to sort of name a few? Of course, I'm sure there might be quite a few based on the industry and based on the process and based on what exactly the FTA is auditing. But could you just list me a few audit hurdles which are actually pretty common across industries?
So I would name you one or two.
Okay.
Then Rishi may add.
Yes, Rishi, please do.
So basically, audit hurdles are timeline. Timeline is the major
Timeline
audit.
is the main one. Okay, because
I'll tell you
that's
why.
the place where the effort of the company is required to maintain records.
Correct. So what happens is that people come and go, employees come and go, and every employee is different. Every employee works in a different fashion. So what happens is that sharing that 5-year information with the FTA, they could ask one tax period, they could ask the entire 5-year. So sharing that 5-year data in their format, as per their requirement, becomes a bit tight within a span of 10 days, 15 days. So they give you extension also. Maybe for 10 days, 20 days, you'll get an extension. Further, you'll get one more 10-day extension. But ultimately, within a span of 1 month, you have to provide all the data. Okay, 5-year worth of data, collating, summarizing. And then you get to know the mistakes which the predecessors have done or the other employee or team members have done. Then it becomes a challenge. And this is what I envisage as a major challenge, because we see clients panicking when they get the notice.
Oh my God.
That how do we comply within 10 days, 5 days, 15
True.
days?
Yeah.
So that's the major challenge. But there are other red flags which, Rishi, if you want to add.
Yeah, absolutely. And one specific hurdle that I'd say is companies treat a specific tax as in isolation, but actually it's just a subset of a larger picture. So many a times in audits, one area of red flag that is missed is it's pretty important to ensure there's reconciliation between your financial statements and the tax data, your VAT returns that you are filing, because whether it's matching from your trial balance and your other documents, it's imperative that there is a reconciliation there, because that's one of the areas that the FTA can go and say, that doesn't make sense with what I'm seeing in your financial statement. So it invites litigation and other matters. Yeah.
Okay. So in your point of view, like, can a company do this by themselves? What I'm understanding is that if they prepare, if they understand, and if they prepare themselves for an audit, even if there is no audit coming, I'm thinking that is a solution for a company. Or else they hire a tax agent or a tax consultant closer to their audit, or once they get an audit. So tell me a solution for a company who does not want to hire an external consultant, and for a company who actually wants to. But it should remain smooth. The process should remain smooth for both of them. So what do you recommend? Like, both of you, what do you think?
What I'd see is that appointing of consultants and tax agents solve the tax problem. Why? Because there's a partner, there's a support who's there behind you, who's working behind the scene. They're not working just for your company, they're working for several other companies in the same industry. They bring that industry experience with them from a VAT perspective or of excise perspective. So that experience, that knowledge base cannot be there, because what happens is that you're working in isolation as a company, and wherein the tax consultant has been seeing several changes which are happening and several audits which are going on. So they know what is happening. So appointing a tax agent or a tax consultant solves major problems. And something which is like legacy issue, the ERP issue, or maybe there is a position which cannot be changed, those issues of course may remain, but by and large, if you see, most of the issues will be solved, and it helps you prepare for a exam. Like you need to spend more time studying before the exam. So it's like the same thing. So if your exam is due 1 month ahead, so you'll prepare in that fashion. And if your exam is just 5 years ahead, so you will just be lenient. So be lenient, but at least plan your way forward.
Or in other words, be a good student. Keep studying from day one. That is, keep maintaining your records.
Agreed.
And from day one, so that even when a tax agent steps in, the person, like the agent actually, or a consultant actually has all the information in front of them.
Agreed.
It doesn't mean that it does. Am I right when I say that it doesn't mean that you don't have to maintain good records and the tax consultant will come in and just
So see,
do some magic?
Maintaining of records is also a very good thing. Records everyone is maintaining. Maintaining of appropriate records is something which is important.
Important.
Appropriate is like something which can help you conclude the audit, not sort of make you lead
Raise more
into
questions.
precisely. So it's something which is appropriate, precise. That is something which is required.
Would you like to add anything, Rishi?
No, absolutely. That I think consultants add a lot of value to the overall health of a company. And if I were to take an analogy, it's almost like a doctor to patient setup, where the company is monitoring their own health. And you go to the doctor, they prescribe you medicines, and hope that you have the best health possible. So
awesome.
Definitely, yeah.
That's a good one. Given the regime right now, I think in addition to audits and preparing for audits and keeping records, as you also mentioned earlier, that there are changes, there are amendments that keep coming in the law. How do you think companies can sort of adapt to that change and make sure that their compliance also adapts along with those changes that are introduced? There are updates, there are evolutions in tax, because as we discussed earlier, that they keep changing rules to rationalize and to make sure companies also are comfortable when they are complying.
So what I have seen over here in this region, that most of the changes and amendments are to rationalize, to support business. That is a very good thing which the FTA does. And if you see the tax procedures law, they underwent a change because they knew that 20 business days for filing reconsideration TDRC is not enough. So they gave out another 20 business days.
Can I like shoot you a question before we continue?
Sure.
So you just mentioned about a tax procedures law.
Yeah.
But as a company, I know about, if I'm a company owner, I know about VAT, I know about excise tax law. So could you just give me a one-liner about what's the tax procedures law?
So tax procedures law is a law which is defining how the tax will be implemented. How you will have to sort of maintain records, and how you will be audited, what are the timelines, what are your rights, and what is the right of the FTA is defined in the tax procedure.
Awesome. So that will give the company idea exactly of how they have to maintain their records.
Correct.
What are their rights when the audit is happening?
Correct.
What are the FTA's rights when the audit is happening? What all can they request for?
Precisely.
Okay, that's pretty interesting. So technically, that's the most important law right now, isn't it?
I would say yes.
Okay.
Because see, what happens is that the FTA bought this law with the intention to sort of implement the entire processes in place and get the processes in place. So now if you have a notice, there's a timeline for submission of notice. There's a timeline for you replying back to the FTA. So there is a process. If you want to file a reconsideration, you have a timeline. You have to file a TDRC, you have to sort of pay the taxes and sort of comply with the timeline. There are other protocols which have to be complied. So if you're not procedurally compliant, you're not compliant. So maybe your case is genuine, maybe your understanding is correct, maybe you are on the correct side of the law, but you fail to comply with the timelines and processes, you may go wrong.
Okay.
That is also one thing which you need to keep in mind as business.
Okay. So
litigation is tough.
That's the tax procedures law,
Yes.
which in my opinion is, I think, prime important.
Agreed.
So based on everything that we have discussed, just to wrap it up now, so what are your final thoughts? What is the way forward for companies? And what do you think they should keep in mind?
Well,
Rishi, do you want to?
Yeah. So, of course, just to wrap things up, companies should be looking at the status of their compliances now and seeing where there are areas to improve. So improving their compliances, improving their internal controls, setting the processes straight. And now, of course, there are many taxes in the UAE. So just making sure that all their procedural systems are catering to the requirements of each compliance and doing their due diligence from perspectives of the entire tax landscape in UAE.
Agreed.
Great.
So I would say one simple thing, that compliance is king. And everyone should plan their compliances to
I
mitigate.
like your one-liners. Compliance is king. And what was the other one?
If
If you think compliance is expensive, try non-compliance.
Agreed. So plan your compliances, just to mitigate the risk of non-compliance and penalties, because everything comes with a cost.
Right, of course, 100%.
Yes.
Thank you so much, both of you. Thank you, Gaurav. Thank you, Rishi, for all the insights that you've shared with us on tax. Even though tax has been in the UAE since the past 5 years, that's indirect tax. Corporate tax is coming up soon. But all of us don't have so much of clarity on exactly how the complete landscape looks like, or what exactly do companies need to do. Even though we know the law, we do not know how should companies comply and what should they keep in mind. So I think this complete session gives them an idea, especially for companies who want to open up here.
Correct.
UAE is actually a country which is inviting investments and startups from around the globe. So this should be a good introduction to them to the tax landscape of the country. Thank you so much, all of you again.
Thank
you.
Thanks.
Thank you.